Welcome to the Relaunch Your Career podcast. I am your host, Leah Lambert, career and interview coach and founder of Relaunch Me, where we help you find the work that you were meant to do. Welcome back to another episode of the Relaunch Your Career podcast, where we talk all about designing the career and life that you love. Today, I'm diving into a question that one of our listeners has sent through to me. Thank you, Matt. And the question is, I want to start a new business. What should I be thinking about from a financial perspective? So whether you're in a corporate job or perhaps have been inspired to start something on your own, or maybe you're just testing the waters, this episode is for you. And I've invited Hannah Jensen and Joy Gao from accounting firm Joy Jensen to talk us through some of the practical but sometimes overlooked things that you might want to consider before launching a business. So before we jump into that, let me introduce our guests, Hannah and Joy. Lovely to have you on the podcast, ladies.
Thanks so much, Leah. Looking forward to this discussion.
Thank you, Leah. Thanks for having us here today.
So before we get started, I'd love for you both to tell us a little bit more about Joy Jensen, just to give us a little bit of background. You're both in Melbourne, but what sort of clients do you work with?
Thanks, Leah. So we just recently opened up our very own practice in July 2024. So we're going to be very well versed in tackling this issue today. We typically look after small businesses from all different stages of their life cycle. So whether it be from thinking about or having an idea, thinking about starting up your own business, to the growth phase, and even getting to the end of that life cycle as well. So wanting to change your direction, whether it be getting out of the business to retire or to sell your business. So we can help from all different aspects in terms of that. And we look after many individual clients and a lot of self-managed super funds as well. So a real wide breadth.
And quite a diverse range of industries, I believe.
Yeah, absolutely. We don't want to pigeonhole ourselves, and it's great to get insights from a broad range of clients as well, because they can all help each other and get in contact and connect with each other to assist in many ways.
Okay, so just thinking about, so Matt, who sent this question in, for most people going into a business, I guess particularly a service-based business, usually they may have, they usually would have the skills that are required to deliver that service, or they might be thinking about starting a product-based business. So assuming they have the skills, the confidence that they know how to deliver the product or the service, what might be some of the other things that they also need to consider when it comes to working out, first of all, whether the business is actually going to make money?
Yeah, so it's great that you've met service business has already got the skills to deliver the business and the necessary credentials. What I think, speaking of service business, first thing to think about is how to make sure that you figure out the 0 to 1 process. So what we're constantly seeing with service business is your client base. Have you thought about how to make a sustainable income? It's like building blocks. The 0 to 1 is always the most difficult, and once that is established, usually it's coming from word of mouth. So speaking of starting a new business, the most important thing first is the business itself. And after that, there's like infrastructure to think about, things like insurance, especially in service businesses. Have you got the proper PI insurance? Have you thought about getting an office? Are you going to work from home? Are you going to rent a premise? If you do that, if you rent a premise, have you thought about your public liability insurance? And also, are you going to hire staff from the get-go, or are you going to wait to try it out first? All these things is the initial things to consider. And after that is then what you're going to put your business in, what structure you're going to put it in.
Yeah, so there's a lot of setup costs right from the beginning, isn't there? Like even if you have a home-based business, you have to usually have a website. I mean, you can probably use LinkedIn these days in place of a website, but most businesses have some sort of website landing page. So you might need someone to design that unless you've got the skills. You might need a CRM or a customer relationship management system. So I've found in my own business, those things do add up when you're paying for all these different systems every month. Tell me a little bit more about how you would choose the right structure for your business, because I know this can be quite confusing for people.
Yeah, absolutely. So there's typically four areas of consideration that we look at when we're speaking to a client who wants to set up their business. On the back of what we just spoke about, the first thing would be the cost. So, like you said, there can be some quite substantial establishment costs, and depending on the type of structure that we put in place, they also have varying costs associated. So, for example, if you're establishing as a sole trader, typically from a setup cost point of view, that's going to be your most cost effective, your cheapest. And if you look at a company structure or a trust structure, they can be more expensive and have more legal costs associated. So that's probably number one.
So, Hannah, um, if for someone who doesn't know what structure would suit them best, are there some guiding rules as to whether you would establish yourself as a company or a trust instead of a sole trader?
Yeah, so it really depends on your personal circumstances. So we look at these considerations holistically. Your assets that you hold personally, or the type of business that you're running, and the risk profile of that business will come into account. The ongoing compliance, so that can be from a tax point of view, or it can be from a legal point of view. So these different structures are governed by different bodies. So it could be the ATO, it could be if you're a company, ASIC governs you and provides you rules and what ground rules of how you can operate. And if you're operating a trust, that's governed by its trustee. So it's very important to understand those obligations that come with each different structure. And then finally, tax is also, from our point of view, a really key factor in what kind of structure to have, because each different structure has a different tax rate. So, for example, your sole trader operation is taxed at a personal marginal rate. So that can be from 0% to 47%. And a company, for example, has a flat tax rate of 25% if it's running a business. So the those are kind of the four areas of consideration. We're looking at the cost, the legal, the governance side of things, as well as the tax.
And I should just clarify, but before we go on, that obviously we're talking about Australian based businesses. I know we have some wonderful listeners from offshore outside of Australia, but we are just talking about Australia. Do you see people get this wrong? Like, what would happen if someone set themselves up in one way and then decided that a different structure was going to be better for them for tax purposes or for other reasons? Can you change that structure?
Yeah, 100%. So the often when people go into businesses, what we say to the client as well is to do it most efficiently. Often when risks are managed, then client can say, for example, choose to start up as a sole trader. As the business grow, they might see the need to set up a company or a trust. We can do that. The key is timing, is when to do it. There will be additional costs for that, including setting up the structure and also the tax considerations. Because when we think about going from a sole trader going to a company or a trust going to a company, the ATO is seeing that as a sale. There's ways to manage it. I think the key is to keep the communication open with your accountant. Also, don't make that decision yourself. Don't feel like you're alone in this process, and have that constant conversation with your accountant. And sometimes accountant will say, look, based on this, and we think it's time to consider, and do allow the time frame to make that change.
I'm going to ask you another question here around if someone was to go into business with a friend or a potential business partner. There's also a lot of considerations there around, I guess, first of all, making sure that they're working towards a common goal. They have clarity around how the business is structured. I assume they need some sort of exit strategy if one person wants to leave the business earlier. If someone was thinking of starting a business with a friend, what would be some of the things that you would recommend they consider?
Initial point is, do you see yourself working in a business with that friend? I think from a structure point of view, there's ways. It's quite mature to go into a business with another person. Structure, there's a couple of ways of doing it, and within the right framework, all of your rights and all the access strategy can be considered. I think the point one is to see if you have a common goal and what you're trying to achieve together. And then the next thing, obviously, is to speak to accountant to figure out what's the best structure for you. Things to consider will be, would you have a different personal scenario? Do you want to get a dividend at the same time, or do you want to take money from the business at different times? Another thing is quite important is the shareholder agreement or holder agreement. Speak to a legal profession. We always say to do this kind of things when things work really rosy. The contract, we often see clients to say, look, we've been friends for many, many years. There's never going to be any issue. But that piece of contracts there is a set and forget. And do that and put in the drawer. That's the best way to go forward.
And they would go and see a commercial lawyer to help set that up?
Correct.
There's obviously a lot of setup costs associated with starting a business that we touched on before. What happens to these setup costs? Because before the business starts, that will come out of your personal account in most cases. How would you account for those down the track?
Definitely keep a record of those. Eventually, when you build your business, it's ideal for the business to pay you back. So when you typically set up a business, ideally you would have a separate bank account in the business's name. So that would be under any structure, sole trader, trust or company or partnership. And then it would typically require some upfront cash to be transferred in from the business owner or owners. So it might take time for you to build that up and get some revenue coming in. But once it's done, you'll hopefully also have some bookkeeping software in place. And do get your accountant involved in that piece as well, because you don't want them to miss out, one, on a deduction in the business. So for any costs that you've put in, you don't want to miss out on those. And two, your bookkeeping software is going to keep track of all of the costs or money that you've put in personally. So down the track, you know what you're owed back.
And particularly important if you are going into it with a friend.
Absolutely. And it's important to keep track of, what each partner or director has put into the business. Again, just to keep track of who's owed what and to keep it equitable.
Speaking of accounting systems, so I use Xero, which I find relatively, very easy to use. Is that the most popular accounting system these days in small businesses, or are people still using QuickBooks or MYOB or other accounting packages?
We also use Xero. We find it to be very user-friendly, really easy, intuitive. It gets the job done from a compliance point of view. So it very quickly collects data about our business in terms of our daily expenditure. We send our invoices out of it quite easily. It's got a great function where it automates, payment reminders to clients who are past the due date. It's fantastic in reporting your ongoing compliance. So, for example, your quarterly BASs, so, reporting your GST, or if you've got employees, it also processes and lodges your installment activity statements, so your withholding tax for your employees as well. And then come time to do your annual compliance, all the data's there. It's a great resource as well to do your filing. So you can upload all of your receipts in one place. Your accountant can get access to that and download information between your business and your professional providers.
Do all the other systems do similar things, or does Xero have some additional functionality?
I think essentially all the bookkeeping software will do those functions. But the key of a bookkeeping software is the data. we always say if you put good data in it, it will produce a good result. We do find Xero is more streamlined. It is particularly with if you run your own CRM or other sales software, it's more easy to integrate that into Xero. We've got client using various of the softwares, and they come with different costs. Some of them particularly better with payroll, some of them are not. Again, have that conversation with the accountant to make that decision.
Hannah, you touched on GST and having to lodge a business activity statement or a BAS on a quarterly basis. Can you explain the rules for when a business owner needs to know that they need to be registered for GST?
Yeah, so firstly, you need to determine whether you are running an enterprise. So essentially, if you're running a business with the intention of making a profit, then you probably tick that box. Part two is that you're obliged to be registered for GST if your turnover is expected to be over $75,000 per year. If it's under, you can still voluntarily apply for GST, but if it's over $75,000, then you have to. Typically, you would be on a quarterly business activity statement or BAS lodgement program. Again, that could be monthly if your turnover is higher, or if you choose to for cash flow purposes, just to ease the burden of the tax bill at the end of the month or quarter.
And this is something that you can help people with, or business owners can do it themselves, correct?
If a business owner is quite savvy in dealing with the ATO, there's a business portal for all business owners. So you can add and remove any tax registrations from that business portal, or your accountant has access to that also.
So if someone is thinking of starting a business, but they're nervous about the finance accounting side, you can outsource that to a bookkeeper or someone like yourselves to assist with that.
Yeah, absolutely. And it's so important for us, helping a lot of businesses start up, that we believe that the business owner has some kind of understanding of the process. So, whether we hold your hand and work on a BAS together, a couple of times, it just converts into so much knowledge and power about your own business, and tends to show that you have a bit more control with your cash flow, are more aware of your upcoming cash flow obligations and lodgement obligations. But once that becomes a bit of a burden, and it takes you away from the actual job that you're best at doing, it's definitely a good idea to outsource that to either a registered BAS agent or your tax agent.
What do you think are the common mistakes that people make going into business from a financial point of view?
Common mistakes. Every business are different. We sometimes see client get nervous is when cash flow becomes their pain point. Depending on nature of the business, the cash flow requirements are different. Obviously, from a service business point of view, the cash flow requirement are different from a product based service business. But then both businesses are looking at the tax bill. I think we often get clients, especially when they started from full-time employment, go into business themselves, they're worried about their tax are not paid along the way. We often get client asking, I've been just started my business for 6 months and haven't put any tax aside. How much should I put aside? The answer varies depending on your structure as well, because different tax structure has different tax implications. Company is straightforward from income tax point of view is 25% if you're trading business. If you're sole trader, then essentially your business income are taxed at your marginal tax rate combined with your other income. So if you've got rental property, you've got other investment income. again, going back to the point, is to have that conversation with the accountant, and they can help you work out your estimated income for the year and provide you a proper level of tax to put aside. We're in a lovely country with different taxes, so income tax is part of it, and with the different nature of the business, you might have other tax to think about. Just back to Hannah's point, if you register for GST, then you need to remember to put the 10% aside when you get money from the customer. Another thing to think about, if you have employment, then all the employee obligations need to be top priority, including your PYG withholding, super obligations, and work cover. With different states, there could be a payroll tax you need to consider as well. Again, having that plan at the start and keep the communication, because the business cycle, as the business grow, the tax requirement will be different.
Okay, so quite a lot to consider there. Let's say things are going well and you get to a position where you can start paying yourself a salary. Is that something you would always recommend?
What an exciting time, when your business is up and running and it's humming along and you've got revenue coming in, you're on top of your expenses and you're finding some surplus cash. So first and foremost, it's really important that you are across your business cash flow. And that's going to take time when you're starting your business, going from that 0 to 1 point, because you're probably not too certain or sure about your client base or your revenue. You might have cyclical income. So you might have really, really strong months, but then no money coming in some months. So you have to be prepared to ride that wave and still support the business when you may not be getting any income. So it might take time to establish that base. So for example, Joy and I, we recently set up our business, and we said to each other, look, for the first 6 months, we're not going to pay ourselves. We're just going to build up the bank balance, the working capital of the business, to get a gauge of, what it looks like, where does our cash levels sit. Once we're happy with that, speak to your accountant, because there's actually several ways that you can pay yourself. Firstly, like we were talking earlier about the contributions that a business owner might put in or expenses that they pay personally to begin with, you want to pay those back first, because that's tax-free money owed back to the owner. Secondly, then you want to formalize, your payment. So it could be as wages, and that has an implication, as Joy said, with pay-as-you-go withholding, super, and work cover. Or depending on your structure, you can pay yourself a dividend or a distribution. So it's really important to speak to your professional advisor to find out what the best methodology is, because they do have different implications. And then I think importantly, it's probably really disappointing if you start paying yourself and then something goes wrong and then you can't pay yourself again. So I think it's really important to find a nice balance that is sustainable and then keep it regular. It's good to have a system in place for your personal spending, and it's also allowing you to forecast that cash outlay each month or fortnight or weekly in your business side of things as well.
Great advice, Hannah. Joy and Hannah, if there is someone out there thinking of starting a business or perhaps now questioning whether they have the right structure and setup, how could they find you?
Always happy pick up a phone call. We're having our website up and running. We're findable, reachable via LinkedIn, email. Again, like I think back to our point, starting your business is so exciting, but you have all these different things to think about. But never think you're alone. The fact that you are starting your business means that what you're good at, which is running that business, working on the business. With things like financial side of things, feel free to contact us. We're happy to spitball ideas, guide you through all the compliance process. So feel free to reach out to us on our mobile number or our email.
I will also put links to your LinkedIn profiles in the show notes so people can find you. Look, Hannah and Joy, thank you so much that was a really practical, useful advice that you gave us today. So I really appreciate you coming on the show. All the best for your business. I know you're both very experienced accountants and great to see you going out and doing something for yourself. So congratulations and yeah, all the best for the rest of the year.
Thank you.
Thanks, Leah.
I hope you enjoyed this episode of Relaunch Your Career. If you did, please subscribe, share with your friends, leave a review, or connect with us on social media at Relaunch Me Career Consulting. If you have any questions about the episode or the work that we do, then contact us via the website relaunchme.com.au. Thanks for listening. Have a great day.